This is Scott Becker with the Becker Private Equity Podcast. Today's story is the stock market can't hold its gains. And really, there's two things going on here. Finally, some good news on the inflation front, which gives people comfort that we're going to end up in a situation where the Fed's going to slow down on raising rates. So as soon as we get to that comfort, something else happens. I mean, and the story on that is the Fed's preferred inflation measure shows the slowest monthly increase since 2020. And this led the markets this morning to go way up based on that potential that inflation would be coming under control. Now, the second story, which has basically led to the erasure of almost all those gains today, I'm a constant watcher. I can't help myself. It's a neurotic problem of watching the markets constantly, and it's why I'm not overinvested in equities because my heart couldn't take it. But after the markets were up almost 1% to 0.75% this morning, now they're almost back to even, and they're basically back to even based on the potential for the government shutdown. And this is fascinating. There's a great article in Yahoo Finance today. The Seinfeld government shutdown is coming at a terrible time for the economy. Now, we generally know that the government shutdowns are generally relatively short term, usually. And at some point, they become more challenging if one side becomes more intransient. And what you've got is a situation where the Republicans, at least there are some serious Republicans that really think that fiscal responsibility is very important and that they really should use the shutdown to try and get some concessions to slow down government spending. Government spending's doubled under Biden from Obama. To the defense of the Democrats, President Trump was also a horrible spender. If you want to talk about somebody who was a Republican in name only in terms of government spending, this is the guy. But you've got two administrations in a row that realize the way to try and keep people happy is to print money and allow full employment. The problem is it's not sustainable and it leads to horrible problems. So now you've got the situation where the market had gains this morning based on inflation slowing, which led to believe the Fed would slow down on raising rates. But now you've got the second problem, which is this concern that the government's going to actually shut down. And this is, on the macro level, people think that'll get solved soon enough. So it won't have long-term macro effects, though it could. If the government bond rating and so forth goes down, it could ultimately make the cost of running government and the cost of deficit spending even that much more so. The flip side is that on a micro level, if people start missing paychecks and other kinds of problems, the shutdown could have a really negative problem for people, because those people that are really reliant on government paychecks and government responsibility, this could be a real problem. In any event, we'll see what happens here. But again, the stock market can't hold its gains is the title of this, and one piece of good news, one piece of bad news, and also the market's giving back most of its gains for the day. Thank you for listening to the Becker Private Equity Podcast, and thank you to our producer, Chanel Bunger. Thank you very much.